Hi, this is Akmir with the Bulletin Board Heroes on Thursday, the 10th of May. Starting off with 88 Energy, where you can see that the shares bounced quite well off the floor of this rising trend channel from October last year. That's also has the 50-day moving average, the blue line there at 2.06 pence. And the view here is that even though we had a rather nasty unfilled gap to the downside, at least while we're above this notional double support around 2 pence, the shares could go on to at least attempt to fill that gap towards the 2.5 pence area. The overall trajectory here up to 3 pence over the next 3 months or so. At this stage, really only a weekly close back below the 2 pence level, really questioning the buy scenario. If you're cautious on the stock, maybe you'd wait for a break of the bottom of the gap at 2.3 pence before going long as a momentum trade. Just wanted to follow up on the situation at Serica, where obviously the shares were trumped by by President Trump's Iran shenanigans. Rather nasty double top now that we have on the daily chart from January and then through to April. I did suggest in the last update, just before Trump, obviously, that if you were cautious on the stock, you wait for a break of this resistance line here at 87 pence. Hopefully people did that. The situation now is that we've fallen back below the 50-day moving average at 74.45 pence, the blue line there, and really we need to see an end of day close at least above that before regarding the stock as a reasonable technical buy again, or a recovery situation. The risk now is that we could actually head back towards the floor of this descending December channel at 60 pence, even if then the shares recover, i.e. echoing the pullback that we saw from the January peak. Moving on to a happier situation, Enquest, which is the stock being sort of stalking for a while. Here we've got a rather messy false dawn that we had at the beginning of the year through the 200-day moving average up to 45 pence. Decent consolidation since then, and it looks as though we've got a mid-move consolidation in terms of this price action that's been in place nearly for the best part of a month, just around the 35-37 pence level. It looks as though, and this is the exciting part, it looks as though that we could break out here and head towards the top of the rising September trend channel at 55 pence. Looks rather ambitious, but at least while we're above the floor of this rising trend channel and the 50-day moving average at 32 pence, 55 pence plus is the technical target there for Enquest. Another bullish situation comes in the form of Cooves. Here we've got the beautiful sideways consolidation over the last couple of weeks between 12 and 14 pence. The breakout yesterday through 15 pence, suggesting that we could at least hit the post-December peaks around 25 to 30 pence for the shares. Beautiful reversal here and reversing that gap, exhaustion gap that we had to the downside at the beginning of March. This stage, minimum on the upside 20 and then up to 25 over the following month or so. Going on to another bullish situation, a company I saw a few months back, Seeing Machines at a presentation. Here we've got beautiful move through the 50-day moving average at the end of last month, 4.97 pence, and really while we're above that, it looks as though the shares are going to accelerate towards the top of this rising October trend channel at 9 pence over the next month or so. Any dips back towards the 6 pence level regarded as buying opportunities on Seeing Machines. A stock that I saw mentioned amongst the Twitterati yesterday is Triad Group. Not really a charting and a great charting situation, but in fact there has actually been a significant technical development here, in the sense that yesterday we had a gap through the 200-day moving average at 58 pence. That implies that there has been a gear shift in terms of the way that the price action is behaving here onto the bullish tack. And the best case scenario here over the next 3 to 4 months is that we hit, or we move towards the top of a rising trend channel that you can draw from mid 2016, heading as high as up 100 pence, and only really back below the 50-day average in the floor of that channel at 54 pence, questioning the buy argument once the RSI, now at 88 pence, cools off a little. That's it for me. More updates later in the week.